Good afternoon and welcome to Stock Talk. My name is Sean Kabak and I will be your host. I'm a livestock and forage specialist working out of the Portage office. Manitoba Agriculture and Resource Development's livestock and forage webinars will run monthly until April. We're glad you can join us for today's presentations, which will be recorded so you can view them at a future date. With the recent COVID situation, we had to cancel our in-person beef and forage days that we were going to hold in 3 locations this week, and Ag Days next week is postponed. Fortunately, our 3 keynote speakers from Beef and Forage Days will be presenting on today's special edition of Stock Talk this afternoon. So today's session will be a half hour longer to accommodate the 3 presentations. The good thing about Stock Talk is it provides you the opportunity to receive the information from your farm at your home. If you have any questions during the talk, feel free to submit them by typing them in on your computer, and we will do our best to have them answered. So in our webinar last month, we talked about beef cattle nutrition, nitrates, and alternative feeds, as well as the Agri Recovery Drought Assistance, feed and transportation programs, and the herd management program. With the feed shortages and nitrate issues in the annual crops, these are and are timely topics. If you missed this webinar, you can still watch it on Manitoba Ag's website on the YouTube channel under Stock Talk. Some recent changes have been made to the feed assistance program, making more feeds eligible, including liquid protein supplements, lick tubs, mineral, vitamins, salt, wet DDGs, wet beet pulp, potatoes, and more. The program applications are available on Manitoba Ag's website. Farming can be a stressful occupation that's at the mercy of Mother Nature and is either one rain away from a drought or a flood. What happens halfway across the world in Russia or Iran can affect markets and affect your bottom line. So to talk to us about how to deal with stressful times in farming, we have Brianna Hagan from the University of Guelph from the Vet College. So I'd like to welcome Brianna.
Good afternoon, everyone, and thanks so much for tuning in today. I am Brianna Hagan, and I'm so sorry that we can't be gathering in person today. But with that in mind, I'm going to do my best to be engaging today and talking about stress and farmer mental health in Canada, which I think is a topic that we can all relate to feeling right now, especially in these pandemic times. So like I said, I'm Brianna. I am a research scientist over at the Ontario Veterinary College, and I've been working in farmer mental health for the last 6 years. And I'm actually physically located in Manitoba. I'm born and raised in Manitoba, so it's my absolute pleasure to be here with you today. I want to start by going back to where all of this research began. And it kind of started with the National Survey of Farmer Mental Health in Canada that was conducted back in 2016, which feels like a lifetime ago. So before this survey was done, there really wasn't any data exploring mental health outcomes with farmers in Canada. So Dr. Andrea Jones-Bitton, who's my PhD supervisor, wanted to change that. She had heard anecdotally, she worked as a large animal veterinarian, that farmers were potentially suffering with some mental health struggles, and she wanted to be able to help. So being trained as a vet and as an epidemiologist, this was a unique opportunity. So she developed this survey of farmer mental health. And originally we were hoping to, survey 300 or so farmers in Ontario. But when this cross-sectional survey went live, it went national, and over 1,100 farmers answered our mental health survey, which kind of speaks to the urgency of the matter in Canada. So within this survey, we looked at many mental health outcomes using validated psychometric scales that have been widely used in other countries to measure things, including stress, which we're going to talk about exclusively today, anxiety, depression, burnout, and resilience in help seeking. And what we found was 45% of farmers were classified as having extremely high stress. Almost 60% of the farmers who took our survey met the criteria for anxiety, and 35% of the farmers met the criteria for depression. And then in addition to this, 40% of farmers across Canada reported that they would feel uneasy about seeking professional help due to what others might think about that. So obviously this is these are concerning results for all of us. One of the things that I mentioned was that almost half of the farmers were classified as having what we would call high stress using the perceived stress scale. And that's one of the things that we wanted to dive into a little bit further, is what is impacting that stress? What contributes to it, and how might we be able to help? I'm hoping this is a topic that rings true for a lot of people who are watching today, and maybe we can talk about what might cause these stresses, what we found in our survey does cause these, not cause, but is associated with these stresses, and how we might be able to combat some of this. So that's what we're going to talk about today. We looked at this in a couple of ways in our research. We looked at it quantitatively with that survey data, creating a multivariable model of associations. And then we did some qualitative interviews to get more in-depth knowledge of what was going on. So within our model, the things that came through as impacting stress significantly included financial stress, gender, particularly being a woman farmer, lack of perceived support from your family, lack of perceived support from the agricultural industry, resilience, and then another thing that came through that was not in our survey but came through in our interviews was the climate crisis. So I'm going to talk about each one of those in turn. But what I want to talk about first is, once we found out what was going on in the survey data, what was impacting stress, we really wanted to know what are some of the drivers behind that. So to do that, I conducted semi-structured, in-depth qualitative interviews. These happened in 2017-2018. We did them in person. This was pre-pandemic times, as long as someone was located within 200 kilometers of where we were at the University of Guelph. So these surveys lasted about an hour, hour and 15 minutes. And then we went into the analysis of themes. So we did that collaboratively to make sure that we were being very rigorous. We used inductive and deductive approaches, looking at the things we had already found in the quantitative survey, and then also looking for new themes of things that might impact stress. So here's what we found. Like I mentioned before, finances or financial stress was described in the quantitative survey as something that impacted stress significantly, and again in our interview data. So financial stress was described by participants as a major uncertainty and a concern related to farming that impacted their overall stress significantly. As one participant explained, with us, our stress was almost all based on financial struggles that we were in. So we knew if we could get things turned around, we would feel better. But there was nothing we could do to make that happen. Participants described financial stress in a number of different ways in our interviews, with many conveying a high degree of severity. So, for example, one farmer explained that you have one shot each year to make money. And another said that nowadays, farming is tantamount to taking a vow of poverty. And for many, there was a bleak outlook for farm finances, and this added to their chronic stress. One farmer said, "Where is it going to stop? Where's the price of land going to stop increasing? If everything else goes up but doesn't go up, cost of living goes up, but we don't get more for our crops, or now for our eggs, or anything. Well, we want those prices to go down. Well, how can the prices of food that we're producing go down and we're not getting paid anymore for it, but everything else has gone up? How are we supposed to make a living with that, So these financial stresses ranged from concerns from day-to-day expenses around just losing one animal, along with costs of medication and time and vet bills, and managing the stress of large amounts of debts that are required to run a farm now, and having everything riding on the farm's financial success. So, for example, one farmer said, the debt load that they have, you can't afford to even make a small mistake because there's just such a fine line between profitability and losing money. So you can imagine how that might impact someone's stress level. Livestock farmers talked about how financial stress came from the fact that raising livestock required financial flexibility because animals aren't widgets. But the reality was not so flexible, with inflexible uniformity of production required to keep yourself above the margins for profit. And then many participants talked about how underlying financial stress increased the stress associated with making these important decisions for animal health. This was a complicated thing for a lot of the farmers that we talked to. So one farmer said, there's what the market demands force you into and what you know is right, and trying to do the best job that you can for the animals that you're working with, but also being realistic about what you have to do just to make it work financially. So you can understand how that might ultimately impact someone's mental health. Another thing that I mentioned has impacted chronic stress and mental health was gender, and particularly for women who farm. There were a few themes even on top of gender that were all kind of wrapped up in being a female farmer, including their identity, the workload that they associated with their roles, and then the additional roles on top of farmer that they took on. So women who participated in our interviews described how being a female farmer added to their overall level of stress and potentially impacted their mental health. These women described the stress associated with still feeling like I'm a woman in a man's world and needing to work harder to establish themselves as the actual farmer versus that traditional label of just the farm wife. Some women described experiencing stress and having their identity as a farmer challenged, with several of these women describing instances when anyone who came onto their farm, a salesperson or an agronomist, would come by the farm and immediately dismiss them by asking for the farmer rather than speaking with them. And women who participated described stress stemming from other feelings of frustration or anger when trying to join industry groups or meetings and feeling dismissed or undervalued by the ag community members. Women also talked about the stress from bearing the load of multiple roles, like the stress of being a mom and a farmer. These women described having all the usual stress and stressors associated with being a farmer and running a farm, but then having the additional pressure and responsibilities of childcare, child rearing, and household management loaded on top of their farming duties. So, for instance, one woman explained, I deal with all the house stuff as well as the farm stuff, and that's also just a part of my job. So the necessity of needing to balance everything was an added stress for many women who were farmers and mothers. For example, one woman said, for me as a mom, it's really balancing everything, the children, their activities, the farm chores. Especially, we rent 3 other farms, so the animals are at different locations. So dragging the kids with me when it's minus 30 or whatever. And especially when the kids were smaller, it was quite the task. Farmers that we spoke to in our interviews also talked about how a perceived lack of support from the agricultural industry as a whole really impacted their stress and subsequently their mental health. So within our interviews, while many farmers spoke favorably about being part of the ag industry and the support that they felt from farmers, saying that they are very neighborly and have very good social networks, they also described considerable stress associated with living in a small community where everyone knows everyone's business and where farmers perceived a societal expectation that they're not supposed to show any weakness. One farmer explained, and I think the other problem with stress is farmers don't want to show weakness because we have to interact with the community. And so I think I've seen it myself that if word gets out that you're having financial stress on your farm, then your suppliers don't want to deal with you as much. Your bankers start to pull back. And so you get this kind of isolation going on. You can imagine how that would ratchet up somebody's level of stress and potentially impact their mental health. So given these community dynamics and perceived expectations that some farmers also described, how a lot of their stress came from the overwhelming stress of continuously comparing themselves to farmers and from farmer to farmer competitiveness. One farmer explained that what farmers are doing is they're fighting other farmers, and so there's always competing against each other on a race to the bottom. Another farmer explained farmers are in this weird situation that, yeah, they've got their next door neighbor that they've known their whole life, and that's a person they can trust. But on the other hand, they don't want to show weakness because that's actually another competitor in the marketplace. And so if they show weakness there, well, then they'll use that to their advantage and maybe take over your farm. This perceived lack of support also continued. It was a common theme into family support as well. So a lack of support from family was often talked about in terms of succession planning. Succession planning was talked about as one of the biggest stresses out there and intensified farmers' overall level of perceived stress and really could impact their mental health. Stories of family conflict or a complete breakdown around succession planning and the lack of transition of farm ownership and control to the younger generations were really common. As one farmer put it, there's so many farmers that hold on to everything pretty tight right until the end, and their sons mostly never get a chance to own anything until it's almost too late. And then maybe dad dies and plans aren't made, and the next thing you know, they lose that farm. Separate from succession planning, participants also discussed the complexity of working directly with their family, who they're with day in and day out, 24/7. While many farmers explained that working with family can be a very positive thing, there can also be a lot of animosity within the family. Many participants talked about how working with family can increase the overall stress because there's no escape valve for their stress, and you live with the same people that you work with. For example, one farmer said family dynamics gets into the way as well because oftentimes you're working with your brother. And no matter if you're a farmer or whoever, you don't always get along with your brothers or your sisters. Or if you're working close with your dad, that can be stressful too, because you may be of similar personality and then clash. And yeah, there's the whole personal interaction of people, and it's not like you're just gonna go to work and then you get to say goodbye at 5, right? You live with these people and they're around the clock, so it can be stressful, and it can be very stressful. Another pressure that came out of these qualitative interviews that can increase chronic stress was related to the climate crisis. So the pressure on farmers to provide a profitable crop amidst obstacles like extreme weather, the pressure that can lead to stress and anxiety greatly affecting their mental health. Unpredictability was talked about by farmers, with one saying, weather is changing. You used to always pretty much guarantee that you would have a week to do everything, a week to plant, a week to do hay. In our case, we used to fill silos. You would always have that week, but it doesn't happen anymore. And so that challenge has become more difficult to predict, the weather patterns. And then there's lack of financial support for crop or animal loss, lack of financial support for upgrading technologies to better suit the current climate and the changing climate, and a lack of public support, or folks blaming farmers for contributing to the climate crisis rather than participating in the solutions. With one farmer saying, so there's just no support. I mean, there just doesn't, and we're the ones on the front lines dealing with climate change. It's brutal. I mean, last year was the worst drought ever recorded and heat, and this year it's the worst rain ever recorded. There's these extremes. Oh, who cares? Farmer will deal with it. Who cares? Who cares? I think this is something that in Manitoba specifically we can really relate to this past year that we had with this incredible drought. Those are things that ratchet up farmers' stress and can lead people to have mental health issues. So I've kind of talked about these negative impacts on stress, but there was also something we found that would help with stress, and that was around resilience. So we didn't ask the people who participated in our interviews to define resilience, but farmers described their resilience in many ways. Some of them referred to a forced resilience from the societal expectation that farmers are innately supposed to be strong, resilient, and suck it up and ride through anything, be salt of the earth. Other farmers described the work that goes into remaining resilient by leaning on family members and venting about their stress in order to alleviate it and remain resilient. Some farmers discussed that they had a very strong bond with the land or their animals, and that taking the time to connect with that helped them build resilience against stress. One farmer talked about how this bond with the land actually allowed them to become aware of their own stress that they were experiencing. Many farmers talked about coping strategies around creating boundaries to distance themselves from the farm when they're off duty, even while remaining on the farm, as a way to build some resilience and manage their stress. Another thing that's really worth mentioning is many of the farmers that we spoke to felt a strong sense of meaning and purpose on their farms, that they brought them fulfillment. And in those times of really high stress, they talked about reflecting on the purpose and why they were there to help them draw up their resilience. One farmer described that we take a lot of pride in the fact that we feed people, and it's work that you feel is meaningful. So that's what we found out back between 2016 and 2018 about the things that are really impacting stress. Another thing that's coming up very soon is that we redid that survey. So we're looking at a second cycle here. So in 2021, back in the fall, we did the second cycle. We looked at the same outcomes and added a few new ones that came up related to the climate, related to COVID-19, which was and is still ongoing, and some other coping strategies that farmers might have. So within the analysis that it's ongoing right now, and we hope to have results out to people soon, the trends are looking relatively similar in that we're still experiencing that high stress, and there are some mental health outcomes that really need tackling moving forward. When you add a layer of COVID-19 on top of that, you can see that there are even worse or even better strategies that are happening. So stay tuned for some of that data to be coming out. But what I really want to focus on for the remaining time that I have today is what can we do about this? So this is a significant problem for farming across Canada, including in Manitoba. What can we do? 3 things that I really want to talk about today is improve mental health literacy of farmers and people who work with farmers, improve overall wellness and a better understanding of what mental wellness is, and then really advocating for reaching out for help when that's needed. So the first point of mental health literacy can be tackled with mental health literacy training like In the Know. Some of you may have heard of In the Know, some of you may not have. But this was a program that was developed to increase mental health literacy for farmers and folks who work with farmers across Canada, that we then developed in an evidence-based way, and we tested it to make sure it worked. It was a 4-hour in-person program when it was designed in small groups, which was lecture and discussion-based. Obviously, the pandemic has changed that, so now we also have an online version that's been widely distributed across Canada. This covered topics that were identified by the farming community as essential when talking about mental health. So for example, the differences between mental illness and mental wellness, talking about stress, anxiety, depression, substance use, suicide, and then coping, help seeking, and resilience. All of our sessions are delivered by a mental health professional that has an in-depth knowledge of agriculture. And all of the examples and discussion activities are all farm-based so that we could maximize retention, hopefully, that was the hope, and get people really engaged in the topics. So to make sure that it was working, we did an evaluation, and we wanted to know whether it would lead to improvement in participants' self-reported mental health knowledge, confidence in recognizing signs and symptoms of a mental health struggle, confidence in speaking to others about mental health, and confidence in helping others with a mental health struggle across immediate 3-month and 6-month follow-up time points. And what we were really fortunate to see is that happened. You can see here looking at the time points, so T0 being before the training, T1 immediately after training, T2 3 months, and T3 6 months. If you look at those reddish and brown bars, people went from in quite knowledgeable and very knowledgeable significantly increased over time, and that increase remained true. The proportion of the participants who took this training who were confident or very confident that they were able to recognize signs and symptoms significantly increased from just about 30 to just about 70%. And this also remains significant 3 and 6 months post-training. Here we see that more than half of our participants indicated that they were comfortable speaking about mental health even before they took this training. But this proportion still significantly increased to about 75% after training, and there was no statistical differences in the 3 and 6 months post, showing that they remained comfortable. And then here, this figure looks at participants' self-reported confidence in helping others with a mental health struggle. So the proportion of people who reported being confident or very confident significantly improved from 12% before the training to 36% after training. And this remained true at 3 and 6 months. When you then include people who felt moderately confident, this gap got even bigger to over 82% reporting they felt moderately or more confident after the training. So fortunately, what that meant was that In the Know was shown to significantly increase knowledge around mental health overall, confidence in speaking about a mental health struggle with somebody else, confidence in recognizing that struggle, and confidence in helping someone who might be struggling with their mental health. And every person, so 100% of participants, said that they would recommend the In the Know training to another farmer. Now, In the Know, after getting these results, we've made In the Know accessible to all the provinces who want them. So now In the Know is running in Nova Scotia, Ontario, Manitoba, Alberta, BC, and soon to be in PEI right away. And we're hoping to get it to every province. We have it in French, we have it in English, and now we have it in Spanish. So we're going to continue to work to push that out across Canada. So that's one thing we can do to make sure that we're decreasing our stress, maintaining our wellness. Another thing that we can all do to cope with stress and remain resilient is just to check in on our wellness. Sometimes I think that people forget that wellness is just not feeling good physically. There are 8 domains of wellness that we can check in on and then make sure that we're not neglecting any component. So as you can see in this little diagram here, these domains include emotional wellness, financial wellness, social and spiritual wellness, occupational wellness, physical, intellectual, and environmental wellness. So I would just encourage you to take some time, especially if you're feeling extra stressed, to think about what domains you might be neglecting or ignoring a little bit and how you might be able to improve that. And this doesn't have to be a time-intensive or a commitment-intensive activity, just acknowledging, you know what? I've been neglecting my social wellness. I need to connect with someone outside of my farm. That might be enough to just trigger something small to improve your overall wellness. So I would suggest when you're doing your chores, check in and then set really small goals to improve any of those domains that might be feeling a little bit low. And just simply remembering that it's not just about, okay, my body is good, I'm in good physical shape, I'm okay. Check in on those other pieces. They're all very, very important. And then the very last thing that I want to suggest is if you're feeling stress, overwhelming stress, seek help. Talk to somebody about that. If you're talking to someone who has In the Know training, if you're talking to your partner or your brother or your friend or your neighbor, those are all really good things to do. But sometimes you need to seek help from a professional. And fortunately on that front, I have some really good news for Manitoba farmers. There is a new farmer wellness program that's being launched in Manitoba exclusively for Manitoba farmers. And it's called the Manitoba Farmer Wellness Program. And what this is, it's a non-for-profit that aims to fill the gap that exists for farmers accessing mental health services. And it's going to be provided by qualified counselors who have farming backgrounds. The program is going to offer farmers and their immediate family members 6 confidential, no-cost counseling sessions. And this program is set to launch on March 1st, 2022. So it's coming right around the corner. I would really encourage you to go to the website, www.manitobafarmerwellness.ca, to learn more about the program, or for anyone who wants to sponsor or donate to the program. It's being run by a wonderful board of people, and this program is going to help in a huge way for our Manitoba farmers. So I think I'm going to leave it here and leave this slide up for you in case you need more information. You can always reach out to me at bhagen@uguelph.ca or reach me on Twitter if that's what you want. And I'm also happy to answer any questions that anyone might have. Thanks so much.
There you go, Sean. You should have the screen back if you want to unmute yourself. And there we go.
Thanks, Lori, and thank you, Brianna. That's excellent that the Manitoba Farmer Wellness Program will be offered in Manitoba starting March the 1st. So if anyone's interested, they can go to that website. Brianna, are you still on the line?
I am. Can you hear me?
Yes, we can. Thank you for that terrific presentation. I guess one question I had, what other resources might be out there, either online or toll-free, that are available to Manitoba producers?
Yeah, so I would encourage producers to go to Do More Ag, their website. They have a really comprehensive list of resources that exist in Canada. When it comes to Manitoba farmers, we actually do also have a farmer's stress line that operates out of Winnipeg actually now. That is confidential and free, that people can call in times of high stress or even crisis. And I can find the number for that and send it along to somebody that can pass it around if that's helpful. And then other than that, this new program starting in March would be the only farmer-based program. But you can always reach out to CMHA, the Canadian Mental Health Association, and they can help you find supports if you're looking for them. And I think that would be about it for right now.
Thank you. The Manitoba Farmer Wellness Program, it's 6 sessions you mentioned, and what's the time frame? How long will that take?
How long will the 6 sessions take?
Right. Is it done over a few months, a few weeks?
I think that would be on a case-to-case basis. So basically whatever type of support that particular farmer might need. So, you know, the hope is that these would be preventative sessions where someone can, you know, using their mental health literacy skills, they realize that, you know, maybe they're not coping so well with their stress or their mental health. And then it can be kind of spread out to what the farmer needs. With that being said, they can also provide crisis services. So something more intensive like that might be a shorter time frame. 6 sessions might happen over weeks instead of months, just so that they can ensure that that person is safe and doing well. But if this is a preventative measure, you know, it could be every few weeks. It's really up to the farmer.
Okay, so it's nice and flexible then to suit their needs.
Absolutely, yeah.
Great. Pam, did you have any questions for Brianna?
None have been posted, Sean.
Okay, well, if anyone has questions for Brianna, you can type them into the questions on the side of your screen, and then we'll try and have those answered through this StockTalk session this afternoon. So once again, thank you, Brianna, for that very in-depth presentation as far as a very important subject that we need to look at more.
Thank you.
So with high grain prices last year, calf prices did surprisingly well for most of the fall feeder run. Strong cattle futures, which supported live fat cattle prices, was one of the reasons for the better feeder prices than expected. So to give us a 2022 cattle market update on outlook, we have Brian Perlet from Canfax. I'd like to welcome Brian.
Thanks, Sean. Hopefully, just getting set up here. Everybody can, oops, and I'll switch this. All right. So
Looks great, Brian. Looks great. Perfect.
Right on. Okay. And I'll, yeah, just maybe for ease and use, I'll just stop my cam, but, or my camera, but it's certainly a pleasure to be here. Would have been nice to be virtual, or I mean, not virtual in person, but we make do with what we can. So certainly everybody's well aware of some of the challenges that the industry's faced over the last couple of years since COVID's hit, and we've, you know, it's plenty of hurdles, I guess you kind of want to say. There's a lot of optimism out there, and I think longer term we remain quite optimistic that you know, some of the challenges today may create even bigger opportunities down the road, but it's getting there. Or I mean, you know, it's taken our business for the next several months possibly to work through some of these large numbers. We've got you know, continued challenges at packing plants here with the latest wave or Omicron, with packing plant slowdowns and such, which you know, certainly has you know, the industry a little bit on its toes and on edge a little bit just to see how bad it is. But for the most part, you know, initial reports are, you know, it's nothing like 2020. But we're still seeing a few challenges at packing plants here today. But I'll start going through this. Looking forward to discussions and questions too. You know, as we go or towards the end. Happy to address what I can. So I've got a overview for next, I don't know what it'll be, 25, half an hour, 25 minutes, 30 minutes, and we'll just can have discussions after. But basically want to start off with, again, another obvious kind of situation, but it's talking about the drought and dry weather. You know, we're well aware of what happened in Western Canada, but you know, the United States continues to struggle. And that area is spread a little bit. Some of the really hard hit drought areas in the north and on the west, it's dissipated a little bit in areas that have got some rains, but also some dryness is creeping east. And you know, the big concern really is into the spring for the corn crop next year, in addition to grazing areas as well. But basically, despite, you know, U.S. cattle numbers are shrinking, we continue to see large feeder runs, large numbers of cattle on feed. You know, near record large cattle on feed numbers, just partly related to this drought situation. And I'll talk a little bit more about the cattle numbers there. But obviously, the dryness here, we've seen a lot of U.S. corn come into Canada as well. We just didn't have the feed grains here where we were exported. We had a significant amount of barley already exported or booked for export last fall, and that left very, very little here domestically. In terms of, so, you know, we talked there, I started out, you know, the challenges we've seen over the last couple of years almost of COVID and uncertainty in the marketplace and restaurants being closed and tourism and all sorts of travel restrictions hitting the economy, I guess you could say. One of the bright spots through all of this has been beef demand. You know, we don't have Canadian cutout values, but if you're looking at this chart here with just the red line, you know, that's from January to December, and that red line is 2021. And we had absolutely incredible beef demand through COVID, despite restaurants being closed or limited capacity. You know, we've seen huge demand. If you look at this, the green line, 2015, 2014, that's when we had some of the highest, previously the highest cutout prices. You know, and we've just destroyed that kind of record, those kind of price levels. We've moved into certainly much higher prices, and we did this in the fact that North America had record beef production. So we had extremely strong cutout wholesale prices, we've had record high retail prices, and we've had record high throughput. So the demand story is very positive. Now, you might be sitting at home and saying, well, you're not seeing this in your cattle prices, and certainly that's the biggest one of the biggest challenges today is how do we get this supply chain, how do we get these high prices passed back to producers? And I think that'll come. I'll talk a little bit more about that, but at least we're starting from a point where we've got, record or extremely strong beef demand, and internationally, I'll talk about our exports here shortly. So, we're seeing extremely strong demand. And then the red line, and then in the second chart here, it's got we're comparing beef prices relative to pork, because usually there's a bit of an elastic band, but those two prices usually stay in a similar proportion of, beef's 2.5, 3 times the price of pork. And again, despite those extremely high beef prices last summer, if you look at the ratio of beef to pork, it really was within the realm and even lower than some of the past years. So what that says, it's not just beef demand, it's overall meat demand, it's red meat demand. We've strengthened sort of to the higher end of the range in terms of beef relative to pork, but again, meat demand is very strong. And, I just like to kind of bring that up because often we hear of the challenges of, consumers want plant-based meats or animal welfare, environmental concerns, all these kinds of things that we often get headlines, but ultimately, consumers are paying up for beef and red meat, and demand remains strong. And that, that's part of where things look optimistic moving forward, which I'll get to. Globally, as I said, international meat demand has been incredibly strong. Part of that's related, we've seen a flattening or almost a shrinking in global meat supplies. African swine fever, where, decimated the Chinese hog herd, and China has almost half the hogs in the world. That rippled through global meat markets, not just pork markets. We've seen incredible demand from China for beef. They've become the world's biggest beef importer, and that supported overall global prices. And as you can see, 2019, 2020, we shrunk. We bounced back in 2021. China's recovered their pork production quite fast. We've seen a little bit of expansion in beef production, or had, I guess. But again, looking at 2022, we're seeing another pullback. We haven't seen, we don't globally for the last 50 years, I think, I'm not sure, there's maybe been once that we've seen 2 years in a row of shrinking global meat supplies. And that's hence supporting these very strong meat prices. Again, 2022, another potential pullback, the US hog herd, European hog herd, seeing some shrinking, beef pulling back ever so slightly as well. And again, when we see these extremely strong grain prices, we generally see a stalling in meat production. And here we're actually seeing potentially a bit of a pullback in global meat production, again, related to these higher feed grain costs or feed costs overall. So that also supports, positive price influences moving forward. So importantly, looking at the U.S. herd, obviously they produce about 10 times as much beef as Canada, and we certainly the biggest driver of our market. The purple line or bars, that's U.S. cattle inventories, and the black line is production. So as I mentioned, we've got record beef production. 2021 is likely the peak in beef production, probably going to see some declines this year. And moving forward, that's the one thing with the drought and cattle going to feed and cows being sold, kind of bumps up our beef production short term, but give that 2-3 years. And, we saw those price impacts in 2014, 2015, when you see big culling rates and a shrinking beef supplies. So, kind of optimistic. We see that kind of, or we see a good price response for cattle prices in the next couple of years. But so the U.S. herd shrunk there. The U.S. herd actually peaked in 2019, and has continued to shrink since. We've got feeder and the feeder supply outside of feedlots, as we place them in, is the smallest since 2013. So remember, we've got near record numbers of cattle on feed though, so we've got to work through these numbers. Hence, somewhat optimistic moving forward, but record numbers on feed, processing plant slowdowns, Omicron type labor issues has us a little bit on pins and needles, and it's going to take a few months to work through big supplies. Not that we're seeing a disaster in the market, but we're maybe not seeing that price response for a while yet. But again, since 2013, we all know what happened to prices in 2014, and that's just going to mean further shrinking smaller calf crop again in 2022 coming forward as well. Cow slaughter in the U.S. has been huge, partly drought-driven, high feed costs, and not very strong profitability through the last couple of years for U.S. beef producers. So they've sold a significant number of cows. Almost the vast majority of the weeks this year were well above last year and anything we've seen in the last few years. It's, I think, this is the largest U.S. cow slaughter since 2011, I believe, 2010 and 2011. So we killed, I think, 500,000 more beef cows in 2021 versus 2018, and 400,000 over 2019. So, that's going to take a pretty big kick or decline in the U.S. calf crop in 2022. So again, that's, if we continue to have this strong demand and shrinking beef prices, we're kind of optimistic. But again, we got to get through these droughts and these drought-induced sort of surge in cattle supplies in the next few months. As I mentioned, Omicron impacting slaughter plants, sort of a busy chart. The brown line, these are the weeks of the year across the bottom. So starting in January, obviously here, I'm not sure if you can see my mouse, but around week 17, when the plants were closed down or the initial wave of COVID hit, we saw drastic reductions. So far in the United States, you can just see the little red bar on the left. They've been processing about 630,000 head a week to start this year. But again, anticipated in supplies, we were hoping for, 680,000 head. So, there's still 50,000 head a week less of fed cattle that maybe they haven't killed the last couple of weeks. So, it's a little bit of a backlog. Again, not burdensome, but it's there. And cattle supplies will start to tighten up. So again, not burdensome, but certainly something we're watching, and it is dragging a little bit on the cash market as we speak today. Just on fed cattle and cows, slaughter cow prices in Canada have really been restricted. Cargill's been struggling a little bit. The plants, really it's everywhere, all across Canada and the US, some plant slowdowns. We've seen cow prices drop significantly. Packers just not aggressive on cows. A lot of cows going to the United States, especially out of Manitoba. Lots of cows are going to the United States. So we've kind of got a floor price there, but rather disappointing. Not much domestic demand for cows. So it is hitting the market here to start the new year on slaughter cattle. On the trade side, as I said, we've seen phenomenal exports. Production obviously has been growing, and that supports exports. But just despite those extremely high North American prices, we've still seen a surge in export volumes. I think export volumes are up 22% over last year, and the value is up 39%. It's almost 40% increase in value of our exports. So we're near record high export volumes. Back to 2002 was the old record. But from a value perspective, it's, I think, 6 years in a row of record export values. And just to put it into perspective, in 2020, and you'll see even despite this drop in volume of exports, we still sit at a record high export value of about $3.3 billion of exports. We just got our November data through to the end of November, and we've already exported $4.1 billion. So we're not even done the year yet, and we've almost exported $1 billion more worth of beef in 2021. So again, that's very positive signs. I know the cattle prices haven't gotten there yet, but as the numbers tighten up and packers need cattle, we will see those cattle prices improve. Imports, that they'd surged last year. Really, retailers were booking out, in the spring, just anything to try and get and secure some beef for the supply chain for the retail shelves. So we saw a surge last year, but we're back to kind of 2019, and as you can see, well below the 5-year average on beef imports coming into Canada. Demand side, as I said, we've seen phenomenal beef demand, and again, the beef demand is not just about consumption, right? We often say, well, beef consumption's been dropping somewhat. It's stabilized the last few years. But again, the demand is the fact, you know, consumers can't eat what's not produced. We had seen some shrinking beef production, but what we've seen lately is with these tighter supplies or given exports, you know, we've had our domestic consumers have had to compete against export markets, and they continue to pay up for beef. At the end of the day, consumption's sort of been flat, but even as these retail prices continue to ratchet up, our consumers continue to buy just as much beef. So, you know, again, that's extremely strong demand. You know, maybe a little bit of pullback on consumption, but very little despite the fact how high retail prices are. So bring it back to Canada. It's just a quick little global overview and United States. But, you know, I talked about the US herd had expanded from 2014 to 2019, whereas Canada just has not. Weather's been a part of that issue. You know, we continue to see sort of that land competition with grassland and hayland being pulled away into grain production. You know, our cow herds, you know, close to 3.5 million cows. So, you know, we got our smallest cow herd in 30 years. You know, this year, again, another drought, very few females retained and bred heifers kept around. That all said, we haven't, our cull rates haven't been that bad in 2019 or 2021, sorry. You know, it wasn't much different than 2019. So despite all the drought, our cow slaughter was up versus a year ago, but you got to remember 2020 cow slaughter was extremely low, and our exports are out of Western Canada were just up marginally. So yeah, the overall culling of the herd wasn't too bad. It'll be a bit smaller, but none of those big, you know, 10-20% drops in the cow herd, not at all. Just a couple percent or 2 to 5 at the most, I think. So our cow herd's still shrinking, calf numbers being tight. Excuse me. So it's interesting, if you look at that last chart where we've seen how much beef or cattle numbers have dropped, we've seen in Canada, our beef production has actually risen faster than the United States. We're over 25% more beef being produced in Canada versus the 2015 low. And I think the US side of things is up maybe 15%. So we've actually seen our beef production, despite our herd growing, we didn't see any expansion. The US expanded. Our beef production's grown faster than the United States. We've seen a little bit of expansion in the packing capacity since 2015. In Manitoba, you know, a little bit more there. And in Alberta, certainly we've seen, you know, since 2015, we've got Harmony Beefs come on. They're killing about 500 head a day. They've expanded. Cargill, JBS, they're seeing a little bit more throughput as well on a daily basis. And a few small regional guys doing a little bit more cattle. So we've seen our beef production grow despite the shrinking cow herd. So we've seen good competition for our packing plants. Feedlot industry's growing, especially in Alberta, pulling more cattle into the West. The other thing, obviously, and despite high grain prices, you know, we continue to grow cattle bigger. 2022, I'd be surprised if we continue to grow much. But again, last year, despite the backlogs we faced in 2020 and cattle not getting slaughtered on a timely basis, 2021 was still and possibly is a record large average steer carcass weight, about 920 pounds, 919. So again, we're producing more beef from less cattle that way as well. So again, somewhat surprising, high grain prices, and you know, the backlog situation wasn't as bad as last year, yet we still had bigger carcasses on average on our steers this year. So adding to the beef production as well. So keeping in mind how, you know, Canadian cow numbers have shrunk dramatically, how has our beef production increased so much? And really that goes back, you know, Canada's still a net exporter of cattle. The last, you know, traditionally we used to export about 800,000 to 1 million head of cattle every year. In the last few years, we've been more hugging around 600,000 head of cattle exports. So we've shrunk that dramatically. But even the bigger story on the other side is our imports. So Western Canada, these are Canadian numbers, but most of these cattle are into the West. We've imported about net imports of 250,000 head. So basically we've imported about 350,000 feeders into Canada this year. It will probably be a little higher. We don't have December data, and we've exported about 100,000. So again, this is how we're filling. You know, we've seen that feedlot expansion, packing capacity expansion. We've got a lot of cattle on feed in Canada. So, you know, again, optimism moving forward. We do have a lot of cattle in the near term to work through in Western Canada. Our U.S. cattle on feed numbers are near record large, about the same as a year ago, whereas in Canada, our cattle on feed numbers are about a good 10% higher than a year ago. So we've still got these cattle to work through in the next few months. But as you can see, in the last fall, we saw exports increase. Imports really fell off in November, December when we started importing grain, and our calf prices have moved to a discount to the United States now. I'll talk a bit more about prices here shortly, or here right now. Looking at fed cattle prices, you can see, you know, overall last year is still second or third highest fed cattle prices on record last year. So, you know, despite we see all these high prices for meat and beef, cattle prices have improved somewhat. Unfortunately for calf producers and feeders, they just haven't increased that much. And again, you got to remember, these feedlots are feeding $9, $10 feed grain, you know, $9 feed barley. So that's taking a huge bite out of your calf prices and feeder prices. And, you know, we do anticipate some hiccups right now on the fed market, especially this week. Again, our packers aren't active. There's a few cattle trading and they're back to the, you know, kind of 260 on the rail. So, you know, we're back to that mid 155 range. And unfortunately, that's just not near enough given high grain prices and what they paid for cattle. Feedlots continue to lose money. Feeder market, you know, Manitoba feeder prices have strengthened through the fall, but, you know, once feed costs really escalated, they pulled back as they seasonally do. But we've started with a surge this year, you know, seeing a lot of those 8 weight, 9 weight steers well into the 90s, or even pushing almost $2 at points. And Manitoba's got a bit of an advantage. There's often Manitoba's got the highest feeder prices in Canada. You've got Ontario. You know, Ontario's in pretty good shape with the feedlot sector. They got cheaper feed grain costs. Their fed prices are quite a bit higher than Alberta now. So, you know, obviously they're pulling hard on your Manitoba feeder cattle, and even some interest out of the US. So Manitoba, you know, your prices may not be where you want them to be, but you're sitting relatively well compared to the rest, most other regions in Canada. One thing that's super important to keep in mind is this basis levels. And, you know, as I mentioned, our cows, you know, are going to the US for a long time. Alberta or Western Canadian cow prices were the highest in North America. And since COVID's really hit, we've got so many cattle on feed, our packers are really focusing on fed cattle, and they've kind of let, you know, the cow market slipped quite a bit, went from a premium to a pretty significant discount to the US, hence cows go south, or have been going south in a little bit bigger way this year. Basis fed cattle too, if you look, there's zero, well, that's a zero. Wherever we're above, where this red line is above zero, that means even Canadian prices, Alberta prices, Western Canadian prices are higher than the United States. And they were hugely higher in this spring, or should say spring of 2020, spring, early summer, May, June, $20 a hundredweight in Canadian dollars. So we've converted everything to Canadian dollars. Your $20 a hundredweight, again, on a 1,500 pound steer, that's $300 a head, where Canadian prices were at a premium. So that was huge. That was sort of supporting some of the feeder prices. But since then, you know, we imported all those cattle, and that's certainly, we're working through big numbers right now. And we've seen, as you follow that line through to the end of the year, we've moved to a pretty big discount to the United States. Now our fed market's at a discount. Again, even in Manitoba, fed cattle now mostly going to Ontario. Or a fair number of fed cattle going to Ontario to Guelph to get processed, just because that's where the economics pulls them to. For you guys, not a lot of cattle going south, unfortunately. When, you know, as soon as you get at a bigger discount than minus $10 a hundredweight, you know, we should be going south. But again, some of these logistical problems, the slowdowns with Omicron, they're just not that interested in our cattle either. So hopefully come spring, if our basis stays weak and everybody's processing levels get up, that arbitrage, we send more cattle south, and that'll support our fed prices. But we've kind of got to see how the next month or two unfold. Well, or 3 or 4 months unfold around cattle supplies. But yeah, we've got more cattle on feed than a year ago, and the US doesn't really, is a bit of that story. And these high basis levels supported our feeder cattle. Obviously, if our fats are worth more, feedlots can pay more for feeder cattle. Here again, this is why we've slowed down our exports and we're seeing more exports. Our fat cattle are worth less. We've got a feed cost disadvantage. Cattle eventually will, the markets will move the cattle to the feed rather than the feed up here. So we're still seeing some come north, but just not near the volumes. And again, price-wise, feedlots, as I said, prices are not terrible for fed cattle, but they just haven't kept up to the cost. So if we just do cash basis, buying calves, buying grain, and selling fats on the cash market, it's been a pretty big losing proposition for months and months. Now, there's been some contracting opportunities. There's been, guys who bought grain and locked it up with the cattle. They bought the calves and the grain. Again, they would be sitting quite a bit better than some of these losses, but again, that varies so much from operation to operation. But overall, it hasn't really been a real exciting, finishing feeding cattle, as probably many of you are aware too, hasn't been a great proposition either. So this is where all of these these red ink, and the cow profits haven't been that good, feedlot profits haven't been that good. Cattle numbers are shrinking. So as they shrink enough, then the packers will have to basically spread some of these dollars back to the producers at some point. The Canadian dollar has also been fairly, a little bit volatile as of late. It was on quite a downtrend last fall. We hit got into the 77-cent range. This is last week, and I don't have this week's dot in there yet, but dollar's right back up to 80 cents again. 80 cents I've often talked about is can be a bit of a ceiling for it, but we'll see. 80, 82 cents is not out of the question. The US dollar's been under a little bit of pressure. Oil's been quite strong. And again, a little bit of talk of interest rates possibly increasing with this inflation talk and such. So definitely got to keep an eye on the dollar. I'll talk briefly about some of the impacts. But, if we stay under 80, 82 cents, we're not too bad. But if we start creeping higher, that takes a bite out of some of the price potential for our calves and feeders. And the big one is grain. Barley. There was Lethbridge barley up to $450 a ton. Even a lot of corn, $410, well over $400. So we anticipated once the corn started flowing north, barley prices would come down. And unfortunately, corn was originally getting delivered in at $360 a ton, and the corn has just been creeping up. It's well over $400 a ton now. But as you can see in Ontario, their feed costs much more closely tracking US corn prices. They've got a huge feed advantage, as I said, so they can pull on your Manitoba feeders to go east. This is just another chart about how, again, leverage is kind of how we call it. How much, who's in the best bargaining position? And it's the packing plants. There's big numbers of cattle on feed, there's barely enough hook space to work through all the cattle. So again, they have the negotiating power right now. They've got more cattle basically offered to them almost than they can process, especially right now with Omicron. So, it's a wait and see game. So that's really restricted the prices relative to beef. On the other hand, they've got people crying for beef on the export side, retailers. So there is certainly a bottleneck at the processing plants. We saw a good pickup late last year. In terms of these, and just at 50%, don't worry about what that percentage, you're comparing a live animal walking on a hoof versus, a primal in a box. So, obviously, over half that animal's lost, or almost half is lost from walking in weight by the time it makes it in a box. So keep that in mind, but these can mean if we get back to 60%, you get 10% more of the cutout. That's like $30 a hundredweight. So those are huge dollar amounts that could get passed back to processing or back to the producers once numbers tighten up. So where to from now? Just trying to get back to a little bit summary wise. We've been trading pretty flat. I don't know how many people here follow the cattle futures, but I always highly recommend that you start to follow it. It's based in the Chicago Mercantile Exchange, and it's in US prices, but it still gives you a pretty good picture. If you were to plot cash prices in Canada from 2009 to today, it would follow a very similar scenario. in terms of these futures. 2014, 2015 were very strong in Canada. Partly our dollar dropped, but overall these price trends, and then we've been sideways. You think of calf prices have been trading from $2 to $2.30 for about the last 5 years, and then obviously ranging around that. What is probably promising here, we've broken out a little bit to the higher end of the range. Certainly we're still optimistic. The futures are pricing in positive prices. They see big demand and less cattle around, so they're pricing in some premiums there, and that's supporting this feeder market to start this year. Obviously we're hoping by later 2022 these numbers will be tightened up, and we'll see some better prices. And if that comes to fruition and grain prices moderate somewhat, it could be could see quite a bit stronger calf prices into this fall. We seem to be having lots of hiccups, so we're always cautious about getting too bullish, but there's an opportunity there for it. Price scenarios. Now this is just a little bit rough table. Cost of gain is huge. We're seeing it now. This almost needs to be extended. Talking to some guys now, they're over $1.60 a pound for every pound of gain they're putting on their calves to get them finished. So and today, feeder futures into the summer, and there's 134, 138 range, which is extremely strong. So again, these high feed costs, some of these 5-weight steers, if grain stays this expensive, you're still running around that $2 mark for calves, give or take. But again, if these feed costs was moderate, it's nothing to get, easily you could add 75 cents. So that's a huge number. We start talking about prices $2.75 for calves. Again, this assumes an 80-cent dollar and a zero basis. So I said the basis is weakened off, so that might be a little bit strong, but for the last few years we've averaged around zero. So again, see lots of potential for upside on the calf prices. We've just got to work through the cattle numbers, any other hiccups, and feed costs. It's but I think some of those will sort out to the benefit of cow-calf producers. And just to put into perspective, I talk about the futures. Where am I time-wise? I'm getting a little long. So, big one is Canadian dollar. I like to point out. So every time, if you look at the futures and a feedlot's got to figure out what he's going to bid on calves, on a 550 weight, every time the loonie moves about 1 cent, given how high the U.S. price is, when you convert those U.S. prices to Canadian dollars, it's about 5.5, almost 6 cents. So if I have a price projection for next year at $2.50 a pound, let's say for calves, and the US dollar or our dollar's at 78 cents, you could add another 10 cents to that price. But again, if it starts creeping up to 82 cents or 84, 86, every time it creeps up 2 cents, you got to take about 10 cents off the price of your calves, just, holding everything else constant. So that's a big change. And this barley one, again, this grain has blown things out of the water. So this is, if barley goes up 50 cents a bushel, the price of your calves goes down about 10 cents. So if barley goes up $1 a bushel, goes up $1, you got to take about 20 cents off the price of your calves. Again, holding everything else constant. We've seen barley go up about $4 a bushel. There's that 80 cents I was talking about. So, when it's talking $2 calves versus $2.75, $2.80, it's the grain that's hitting us. There's that packer bottleneck for sure, but barley and feed costs have taken a big bite out of our calf prices, and will be key to watch. And that's where weather comes in. Hopefully the U.S. gets a big corn crop next year. So that's all I want to talk about on that table. Is wrapping up. We've got a mobile site. That was helped with FCC, or Ag Expert helped us. So it's a free website. If you go to canfax.ca, and I'll show that next, and you can click on our mobile site. You can go look at the futures markets. You can look at charts. You can see your price insurance coverage tables, and it's got a break-even calculator and price projections. So you could go in there today. You could say, what do I think calf prices are going to be in October 2022? So, and it'll give you a price based on what the futures are doing, the dollar, and then you've got to put in this cost of barley. So again, this is an old screenshot, but yeah, have a look at that. It's free to anybody. And if you go to our website, it's just click on this banner if you can see my mouse. So I'll just finally say, CanFax, we're a membership based organization. We don't get checkoff dollars or government funding or anything. We're a nonprofit service for the industry. So if you're wanting more market information, cow calf or backgrounding information, an annual subscription right now is only $175 a year. So, and we've got online data, weekly reports. There's myself, 2 other analysts in the office. You can call in and pick our brains on what's going on feeders, fats, cows, anything, you name it. I'll just point that out. And with that, I will stop there. Appreciate everybody's time, and running a little bit later here. So I'll pause and wait.
Thank you, Brian. Always a wealth of information that helps producers have a better understanding of what's happening in the cattle markets.
Thanks.
Pam, did we have any questions for Brian?
None at the moment.
All right, in sake of time then, once again, thank you, Brian. And if we do have any questions that come in afterwards, we'll try and have those answered on our chat box. So the lack of snow last winter meant very little runoff to recharge wells and dugouts. Many summer watering systems were low or ran out of water. So to talk about winter and summer alternative watering systems, we have Derek Verhelst from Kelm Solar. So welcome, Derek.
Okay, thanks. Thanks for having me, Sean. I assume everybody can hear me, so and can see my screen. So I'm going to get started. So we will fairly quickly talk about alternative watering solutions that both work in both the summer and the water and the winter. Pardon me. Yeah, last year with the drought, we were busier than normal with new customers and existing customers having to upgrade sort of their existing pump as the water level changed. Is to start off, when I first got asked to do this, I mean, I want to talk about solar, obviously as a solar guy, but really the question was what exactly is an alternative water system, or what do we mean? And really, we're talking about an alternative to cattle drinking surface water, and also, if necessary, an alternative to grid power. So those are the 2 things we're looking at when we consider alternatives. So what we'll cover today is just a quick definition of alternative: not drinking surface water, not using grid power. The opportunity for alternative sources. So what are the water sources? What are the options? I will spend a little more time on solar water pumping than the other ones. What we offer for winter watering, and then just some of the, well, and then I guess I got it on there twice, my bad, but just the economics behind why we look at alternative water systems, and then a round table if we have time or questions, however you want to phrase that. So sourcing water, the water, I mean, and I don't think a lot of what I'm going to say is going to be a surprise to anybody, so I will go over it quickly. But when we're looking to water our animals, we're looking at streams and rivers, wells, or dugouts, reservoirs, sloughs, kind of any body of water that exists where the cows are, or underneath the cows in the case of wells. Oops. Sorry about that. So step 1, you've located a good water source, but there's no power near it, because that's often the case. If you've got a dugout in your yard, you probably got power there. An old yard source, there's power there, and then it becomes simple. You make the decision that you're going to fence off your dugout, and you put a pump in that plugs into an outlet, and away you go. If that's not an option, we can get a generator to run the pump, a cow-operated pump, a wind-powered pump, our solar powered water pump, and then in the winter, some of those all work in the winter. And then we also offer, and so do our competitors offer, energy-free insulated troughs. So when I say cow-operated, I'm talking primarily about the frost-free nose pumps. I think most people have seen them at a trade show, have them. They work on pressure systems, over a cased well, over a bored well, or beside a dugout, assuming you dig it in. Essentially, the water rests below the frost line, so they do work in summer and winter. The cow goes up, uses its nose to activate a mechanical pump that's in the water, and the cow gets water. So that's our first alternative to a standard water system. No power required, summer and winter option. Wind power, not quite as straightforward. This here has got a windmill over an aquifer, if you will. You can float a windmill pump in a dugout or any body of water. And essentially, with the windmill, the challenge is having water when the wind isn't blowing. So you need to have a storage tank there. So your storage tank should be sized for 2 or 3 days worth of reserve for your animals. So if you got 100 head in the summer, and we assume they're going to drink 15 gallons a day, that's a 4,500 gallon storage tank that needs to be full to provide the backup on those days that the wind isn't blowing. And now, again, like I said, we'd go pretty quickly through those two. I don't know a lot of details about them. I know a lot more about the solar solution. So the solar solution, we have a DC pump. We have several different available. I know our customers have several different ones available. I would say we sell batteries with 90 to 95% of our systems. So that's our backup power rather than storing the energy in water. We store the energy in batteries. The solar panels are there to charge the battery. We've got a charge controller on our system that it acts as the brains of the system and ensures our batteries don't boil over on those sunny days when the system's not being used. And it also stops the pump from running when the batteries get too low, because we still use flooded lead acid batteries, and when those get below 50%, they take quite the charge to recharge them. So the system will cut itself off before it gets to that point, allowing it to cycle a little more. And as I sort of already mentioned, the batteries act to allow for pumping when there is no sun, be it at night, be it a cloudy day, spring and fall, or sorry, fall and winter when there's just not as much sun out. Our batteries are working a lot harder. I call these solar pump options, but really this is standard for all pumps. You've either got a centrifugal pump or a positive displacement pump. Our centrifugal pumps are very efficient. They have higher output, but they do have a limited distance from the source to the trough. The most lift we offer is 70 feet, and that's a Lorentz centric system. It can be floated, or it fits in a 4-inch casing, so suitable for almost all water types. But it's going to lift at a max of 70 feet. And all our centrifugal pumps drain back to the source, which make them, assuming the check valve is taken out, make them suitable for winter watering. And that, as long as there is lift, the water is going to drain back, and it's not going to freeze in that pipe. And you're going to be able to turn the pump on again in that fall and in winter time. When we talk about lift, I know it's not on the slide. When we talk about lift, that is from the water level to where the trough is going to be. And if you're using 1.5-inch or larger pipe, you can traverse quite a distance with a centrifugal pump. It's about 6 feet of lift you lose for every 100 feet you traverse with 1.5-inch lines. So if you had 40 feet of lift, you could still move that water 200 feet across a pasture, for example, to get to where you want to water the animals. We then offer positive displacement pump. They're less efficient. They're lower gallons per minute, but they offer a higher lift capacity and therefore a longer delivery distance. So we offer a piston pump system, for example, that works as a pressure system, can be put on a pressure pipeline, and can move the water 1 mile, pardon me. That system is it's a surface system, so that example is kind of a 2-season, 1.5 season system. It doesn't like the cold at all. So unless you've got an insulated pump house, you know, that you do need to have something to protect the system, but if it's not an insulated pump house, that's probably only going to be good for summer and maybe half a spring and the first little bit of fall. We get into solar pump sizing, which is probably the most important step when we're selling a system or when you're purchasing a system. If you go and buy, like I said, if you're just going to get a Grundfos pump and plug it in and run it, it doesn't, like, it's going to run all day for you essentially. And you know, the difference in price probably isn't that much between one that does 5 gallons a minute and 10 gallons a minute and vice versa. When we get into solar pumps, we need to know as much information as possible so we can put a system in there that's going to be efficient as efficient as possible and require a lower investment on your part and a lower total cost of ownership. These pumps each pump has a different fixed gallon per minute. So if you're buying a K1 float pump or a Laurent centric pump, you know, the float pump does 12 gallons a minute, the centric pump does 15 gallons a minute. The only difference between having 50 animals, 150 animals is that pump has to run longer. So for a pump to run longer, you need more batteries. If you've got more batteries, you need more solar panels. Adding batteries is sort of, it's like a one-time gain. If you don't add solar panels, you're gonna use all those amp hours. And if you don't have the solar panels one time, and if you don't have the solar panels to recharge them, then it can be detrimental to have batteries and solar panels not sort of in sync because of that problem where the solar panels just can't generate enough power to recharge the batteries. Less of an issue if you're doing a summer only system where there's a lot of sunlight, more of an issue in the fall and winter. More batteries and more panels just means more of an upfront investment. We don't recommend undersizing a system, not because we want the biggest sale possible, but really we want the customer to be successful. So if you're on the cusp, the price of buying one panel at the time of purchase is probably less than the cost of not having water for 3 days and then having us ship you another system or having to drive to Lumsden or your nearest dealer and pick one up. The second reason is often when we talk to people and we're sizing their system, you know, we ask the question, how many cow-calf pairs do you have or how many animals on the system? And they'll say, well, you know, right now 50, but it could be as much as 80, it could be much as 120, or, you know, I'm planning on growing my herd next year. So again, that future planning can put all the right components in place now rather than having to replace things to different components to get to the size that you need. Just as an example, this is how we size our system. Down the left is the lift. So our K1 float pump does up to 12 feet of lift. At 12 feet, it's going to do 13 gallons and draw 11 amps an hour. So we calculate with one 100 watt solar panel, we'd recommend one 12 volt battery. It could do 2,000 gallons a day, which is going to do, you know, we probably should round this off, but 136 cow-calf pairs. And that's the math we have for all of our system. The amount of solar panels, like a 100 watt solar panel, we'd say one battery, and then a 160 watt solar panel, it's kind of 2 batteries per 160 watt solar panel. So in this example, the first one you need 1 battery for, the second one you need 2 batteries, and the third chart, the 2160, you'd need 4 batteries. That being said, with 4 batteries and 12 feet of lift, you're gonna move 5,700 gallons a day during the summer and do over 500 animals. Now we offer 2 winter systems. Again, I did talk about the frost-free nose pump also as an alternative winter system. I know that some of our competitors have similar systems but different. I believe it's Cap Solar that's got a similar insulated trough, but you can add a propane heater to it and whatnot. Our insulated trough, that's the 500 gallon in that picture. If you can see it, it's got 8 drink holes. We have minimum requirements for our insulated troughs. The thought being the water coming into that trough is groundwater. It's coming in at 4 or 5 degrees Celsius. The trough has 2 to 2.5 inches of rigid spray foam insulation on all around it. 100 animals drinking out of that trough in the winter is going to turn that water over once a day. And generally speaking, you know, if it's minus 35 for 2 weeks like it was, that water doesn't exist in the trough long enough to freeze. Each of those holes has a drink tube, so the air is only 10 inches of diameter of the water is exposed. So you do get ice buildup in those holes on cold days, but it can be chipped out or broken through by the animals. We have a 200 gallon, which we say is 40 animals to drink 200 gallons a day, and a 100 gallon, which would be 20 animals to turn that trough once a day. The picture we have there, it's a bottom feed, so it's sitting on a pressure system. It can replace watering bowls in the yard, but also it can be in a pasture with a well, and as long as that well pump is a centrifugal pump, it'll drain back. So if there's power there, again, you can use a standard pump to get water out of the well, or we can pair the insulated trough with one of our systems to get water out of the well and into a trough for the animals. The second option, I don't know how well you can see it, but it's our Motion Eye system. So it's similar to the frost-free nose pump in that it's on a wet well that's gravity fed from a dugout. So we sink a casing in the ground. It's usually a 20-foot casing, so it's sunk 18 feet in the ground, and we gravity feed from a dugout and keep that water below the frost line. Cow comes up, activates the Motion Eye. The Motion Eye detects the cow, activates the pump. The water is at the surface in the bowl for the animals to drink. When they leave, it drains back into that casing, and then rinse and repeat for every time the animals walk up. And sizing for that would be similar to the other ones in terms of if you had, you know, the one in there, that's a 100-watt panel, probably one battery, I don't know for sure, and that can do about 60 animals. 160-watt panel can do 95 animals, and we've got a couple guys in northern Manitoba, I believe, that have done up to 500 animals on one of our systems. That's with 6 solar panels, a dozen batteries, and a wind machine as backup. A wind machine to charge the battery, sorry, not to move the water. So the economics behind the alternative system, don't get me wrong, I know it. I know they cost money. They're an upfront investment. They cost more than going to Vern's Pump House here in Regina, for example, and getting a pump and putting it down a well. But they cost a lot less than getting power brought to that water source. Again, I know I'm talking to Manitoba producers here, but I know in Saskatchewan, SaskPower, our Crown utility, you know, they'll quote upwards of $10,000 just to get the power to the water source, and then it's your monthly bill on top of that. So the investment in a solar system is less than that. Your return is better weight gain. There's a PFRA study and another study from the Beef Research Council that cattle drinking clean water gain 18 more pounds than cattle who don't drink clean water. So there's the economics that way. There's the healthy riparian areas, which is going to be good for you and your downstream users who use the water for other reasons. We've got a dealer in Gladmer, Saskatchewan that loves to show pictures. I don't have them of how good his dugout looks, because he's never let cattle in it. He's fenced off his dugout. He's put a system in. He's put a trough outside his fence, and he's never had to clean his dugout out. So he saved that expense, and he's got cleaner water if he wants fish in there, if he wants to use it for spraying. He's got all those stories at trade shows that he likes to tell people. We do see foot-related problems reduced when the animals aren't in the water. And finally, it keeps cattle and yourself off the ice in the winter system specifically. You're not out there chopping holes. And you know, the cost, again, anecdotally, I'm not a rancher, I only hear these things at trade shows, but the cost of our system is, you know, often our system is bought after someone has lost a cow through the ice and they're told the price, and like, oh, that, you know, that was the price, that was the same as losing that animal last year. So they're happy to invest and keep themselves safe and keep their animals off the ice. That is very quickly alternative water systems. I'll turn it back over to you, Sean.
Thank you, Derek. So the technology has improved quite a bit over the last number of years, and the cost has come down. So I mean, it's working in producers' favors that are looking at this type of technology. And I know last year when a lot of our dugouts started off low and producers were running out of water mid grazing season, if you can fence off your dugout, you keep the cattle out, you have better water quality, you have a better longevity on your water supply. And so there's a lot of pluses to it. And with our BMP 503 water development program last year, fencing off the dugouts and using an alternative watering system is part of what has to be done. So it's definitely something for producers that should consider if they haven't set one up yet. Pam, how are you doing?
Okay. There are no questions at the moment.
What's the supply like right now, Derek? I know with the big demand there was last year in Manitoba, and I'm suspecting right across the prairies, is the supply pretty good right now for the panels and for the pumps and stuff?
You know, we're in a good spot now in terms of the inventory we have at the shop here. We are still probably 2 months behind on processing orders because of that problem. If it wasn't panels, it was wire. If it wasn't wire, it was pumps. So yeah, we got whacked with a couple things last year. One being the drought, two being so that we were busier than ever. And then, yeah, the supply chain caused problems. I think we're in a good spot right now, and you know, we've learned from last year, so we've got inventory coming in we've got enough on hand right now to deal with what's on our books ordered, and we've got stuff coming in with hopefully confirmed ship dates, but at least projected ship dates well ahead of when we're going to need them.
And how was the supply like back in the summertime? Was it quite a bit longer to get a system?
Yeah, like I would say, we started the year pretty good, and then it slowly slid to about 4 weeks to get a system. And we're probably 6 weeks behind, but this is our downtime. So we are catching up and hopefully turning the corner to get ahead for next year. So we're kind of back in. I like to think we were in a pretty good spot in 2020, where it was kind of 3 to 4 days, like within the same week we would ship the system or have it available for pickup. And that's what we should be at this year, assuming our suppliers can meet their ship times, and they've all adjusted them. Consider, you know, it used to be 1 week, now it's 7 or 8 weeks, and we're ahead of that. So hopefully they're keeping ahead of it, and they're projecting accurately as well.
Well, there's no reason why the supply chain issues shouldn't affect the alternative watering systems like it has affected almost every other commodity out there. So encourage any producer who's looking at getting a system for the upcoming season. We do have better snow cover this year. There's potential for a little more runoff, but don't wait too long to get your systems booked and ordered so that they can be in place for the livestock when grazing season starts up in June. So if there isn't any questions from Pam, I'd like to thank Derek for his presentation and all of our other presenters this afternoon. We appreciate your participation and the sharing of your information that you had for us today. So our next Stock Talk webinar will be February the 17th, where we will have a more in-depth look at the cattle markets, as well as managing shrink. On March the 10th, we will cover polycrops and cover crops, as well as the Western Livestock Price Insurance and Forage Insurance Program. And then on April 14th, we will look at perennial forage rejuvenation and pasture management, sod and mob, and passive forage seeding. We have a number of livestock specialists around the province to help you with your ration questions, feed testing, forage establishment, forage fertility, working on drought programs, and more. Pam Iwanchesko works out of the Dauphin office. Tim Clark covers the Interlake. Elizabeth Nurnberg in Roblin, myself in Portage, and Marnie McCracken in the Paw. So feel free to contact any of the livestock and forage specialists. And then if you're looking for program information, whether it's the feed or transportation assistance program or the herd management program, a lot of the information is on our website. Our address is www.gov.mb.ca/agriculture. And on there, you can see right center of the page is drought assistance for livestock producers. You click on that, that'll take you to the programs and the application forms and all the pertinent information. And then on the right-hand side of our homepage is a number of quick links, and there you can find different links to our hay and pasture and straw listings. So if you have hay for sale, you can list it. If you're looking for hay, there's not a lot available right now because of the short supply. AgriMaps is there if you want to look at aerial photos across the province, weather reports. Our Ag Talk, our Stock Talk, our Crop Talk links are there as well. So that's our webpage. And then we have our 10 MASC offices across the province where you can call in looking for MASC, agri-insurance, or lending information. And then we have an 1844 number for Manitoba Agriculture, as well as a 1833 number for MASC. So that concludes today's Stock Talk. I would like to thank you for joining. I hope you'll join us again next time on February the 17th, and have a great day.